What if I told you that Bitcoin is poised to hit an unimaginable $1.5 million per coin, and it's happening faster than most believe? Yes, you heard that right. Cathie Wood, the renowned CEO of ARK Invest, has doubled down on her bullish Bitcoin outlook, predicting that this groundbreaking milestone could come much sooner than anticipated. But here's the kicker: she's not alone. Bitcoin maximalist James Lavish has also added his voice to the growing chorus, offering insights that are reshaping 2025's Bitcoin narrative. Cathie Wood isn't just making wild guesses. Her $1.5 million Bitcoin prediction stems from years of rigorous research and analysis. ARK Invest's conviction lies in the transformative potential of Bitcoin as a digital gold standard. With increasing institutional adoption, dwindling supply due to halving cycles, and the looming collapse of traditional fiat systems, Bitcoin is no longer just an option. It's a necessity. Wood believes that the acceleration of hyperinflation in emerging markets and growing distrust in centralized banking will drive Bitcoin to become the go-to store of value, potentially surpassing gold in market capitalization. Let's explore why some of the brightest minds in finance are convinced that Bitcoin is on the brink of an extraordinary surge, and what this could mean for your financial future. But before we dive in, take a moment to like this video, share your thoughts in the comments below, and subscribe to the channel for more valuable crypto insights. Thank you, and enjoy the video.
The Bitcoin price relative to gold, the gold price. You can see it broke out at the end of last year. It's testing now. We have seen the gold price go up recently, and the Bitcoin price, while it broke through 100 to, I think we got to 108,000, it's come in a bit, and makes sense that it'll be testing a breakout. As you know, we believe that the Bitcoin price has miles to go for all kinds of reasons that we will delineate in our Big Ideas report. Our Big Ideas report will be out in a few weeks, and in that report you'll see how we get to our Bitcoin price forecast. We are in print, the bull case being 1.5 million, and while we have changed the way in which we get there, we do believe we're going to get there, especially given this administration's sponsorship of Bitcoin. It may even end up as part of Treasury's reserves. So if we're right also that the gold price is unlikely to move out of control in the inflationary environment, meaning disinflationary environment that we see, then Bitcoin will be responding more to its role as a technology and a new asset class than to its role, like gold, as a store of value. And it should continue to pull away from gold in the years ahead.
Bitcoin maximalist James Lavish shares Cathie Wood's optimism, but adds a fascinating perspective. He likens Bitcoin's adoption curve to the internet's trajectory in the 1990s, initially slow, but now accelerating at a breathtaking rate. Lavish believes that we'll see the convergence of groundbreaking trends: sovereign nations embracing Bitcoin, deeper integration into global financial systems, and the emergence of Bitcoin as a strategic reserve asset. Add to that the momentum of pro-crypto and Bitcoin-friendly policies, and you have what Lavish calls the perfect storm that could propel Bitcoin out of its current range and into uncharted territory. Let's delve into Lavish's insights and uncover his bold prediction for Bitcoin's future in 2025.
We're seeing right now that with Bitcoin in particular, there's now this new way to store value, and it's becoming, effectively, it's taking market share away from gold. And I think it will do that, it'll continue to do that over the course of a number of years. But the reason for that is that it's trustless. And so what you have to know about cryptocurrencies and the different ones, there are some that will have utility. That's reality. There will be some utility there. And so what is revolutionary to me about it especially with Bitcoin, is that trustless nature, where you have this immutable blockchain that cannot be altered, and that all the incentives are aligned. They're aligned in order to keep that in order to keep that chain unbroken. And so you can trust that without having to trust anybody else on the other side of the transaction. And that's really important. What we saw back in 1998 and back in 2008 is that counterparty risk was massive. And so just at the base level, not having to have counterparty risk on any, whether it's monetary, financial, whether it's insurance, whether it's deeds to houses, whatever it may be, that having a trusted blockchain is something that we've never had in pretty much the history of the world. We've always been on a ledger that we have to trust people to keep that ledger and trust that that centralized ledger is correct. But not having that is a really big deal. It's going to transform industries in ways that we can't even imagine. So Bitcoin is a long way to go. So even though we're talking about it, and even though it's an asset that's worth about $2 trillion now, it's only a tiny fraction. It's like 0.23 or 0.25% of total global investable assets around the world, and which are about 900 trillion. So how is it going to change? Well, what happens is, as people recognize Bitcoin as a separate investable asset class, institutions are understanding it. There's a massive amount of tailwinds behind it right now, which is exactly why we started the Bitcoin Opportunity Fund, because we see all the opportunity that's in there, in this ecosystem. Well, why is that? Well, right now it's the ultimate store of value, in our opinion, and it will grow to be the ultimate store of value in the world, in our opinion, and again, for the reasons I stated before. But the reality is, right now, it's a digital asset. It's not money yet. It may become money down the in the future, but it's not generally accepted everywhere. It's it's a great store of value, but not a means of exchange yet. And so what I believe will happen is that the first thing it will do is it will take a lot of that market share from gold, and it will more than double or triple the size of gold in somewhere in the relatively near future. Not years, but certainly in the next decade or so. And the reason for that is that it has properties that are much stronger than gold and are much more advantageous to have as a store of value. So that's part of it. The second part is that as it does grow and the institutions do adopt it and they put it in their portfolio as a separate asset class, they're going to start understanding that, wow, I don't want to hold 10, 20, 30-year treasuries or some of this corporate debt that's way out there, that's way riskier. I'd rather take some of my money and put it in Bitcoin and hedge against that inflation that's still occurring, because the inflation, in my opinion, is only going to continue and could likely get worse for a period of time.
So what's your 5-year price target on Bitcoin?
Well, so if we're in 2025 now, 2030, I'd say it's somewhere between $700 and $1 million per Bitcoin.
Buddy Cliff Asness says that, well, we got computers that are turned on running a mathematical equation, and it's just a bunch of bupkis, and it'll go to 250, but then by 2030, it'll be worth 10,000. There'll be some holdouts that'll have it worth 10,000. What has he got wrong about that?
Well, I think he's got wrong is that the network itself is a lot stronger than he understands, right? So what I like to tell people who are newcomers is that Bitcoin's digital property. It's a superior form of digital gold, right? And it's shown it can no longer be ignored as store of value, right? So we're seeing it happen in real time. So I focus on the trust. I've been talking about the trust. And so Bitcoin is a rapidly growing network, and it's operated continuously since 2013. It had one hiccup then, but since then it's processed over 1 billion transactions and maintained over 11 years of uninterrupted 12 years of uninterrupted service. So But why is that? It's because the network is secured by 175 terawatt hours of power. That all those computers that are securing the network, it's equivalent to 20 nuclear reactors running continuously. So, put simply, the Bitcoin network is a fortress digital of power. It's nation state level resistant, and it's growing stronger every day. So that's what he's got wrong, is people don't understand that network effect and the strength of the network. That's where it is. And once you do understand that, it clicks for you, then everything else falls into place.
Both Wood and Lavish share a compelling vision of Bitcoin's future, one where institutional adoption serves as the driving force behind its meteoric rise. Titans of finance like BlackRock, Fidelity, and ARK Invest are not just dabbling in Bitcoin, they're leading the charge with Bitcoin ETFs. These financial products have the potential to unlock trillions of dollars in capital, paving the way for Bitcoin to dominate mainstream investment portfolios. The ripple effect is already in motion, as companies increasingly allocate their reserves to Bitcoin, viewing it as the ultimate shield against inflation and economic turmoil. And then there's Bitcoin's secret weapon: scarcity. Unlike fiat currencies, endlessly churned out by governments, Bitcoin's supply is forever capped at 21 million coins, a feature that only amplifies its value as demand surges. What do you think about Cathie Wood and James Lavish's bold predictions? Share your thoughts in the comments below. Hit that like button, and don't forget to subscribe to the channel for more insights like these. Your support makes a world of difference. Thank you for watching, and see you in the next video.